We're going to do a 40,000-foot overview of doing business in the states. Obviously, we're all familiar with the 50-state jurisdiction. We have state and federal, but there are certain crucial developments from an insurance standpoint, and doing business in different states can have an impact on the actual coverage that you have, the amount of coverage that you have, the way that your policy is interpreted, et cetera. So we're going to talk a little bit about that. We're going to talk about how you handle those questions at the outset, before you have a loss, when you are placing your coverage, so that you don't have to deal with it on the back end when it is inevitably more expensive. Insurance 101, we're going to very briefly touch upon CGLs, excess policies, umbrella policies, but we're really going to focus, we're going to try and drill down very quickly on cyber. On cyber liability, we're going to talk a little bit about quantifying data breaches, some recent developments, affected companies, and your responsibilities as business owners going forward in your various areas. So with that, 40,000 feet. 50 states, 50 different jurisdictions. Federal law on top of state law in addition to that. There are conservative jurisdictions, particularly the Fifth Circuit, when it comes to insurance coverage. Both Texas and Louisiana, as a result of our well-developed energy and energy market, we have had many, many, many cases interpreting indemnity provisions, third-party vendor agreements, master services agreements, and of course, insurance policies. So there's a very well-developed case law that you can refer to, that your lawyer, your broker can refer to make sure that they tell you and they understand and you understand the coverages that you have for your CGL, your umbrella, your excess, your traditional policies. And one of the benefits of that CGL is that it developed over the course of many years. It developed in public. It developed in the court system with people publicly in the record, on the record, explaining to each other what it meant. And why is that important? Well, cyber policies, as we will talk about, they have not been developed in the public sphere. They have been developed under arbitration, under confidential proceedings. And so what does that mean for you? Well, it means that you don't know what you're buying, and that's a problem. And it often means that the insurer doesn't know what you're buying, and they like that because they can figure it out afterwards. And that's something that makes it even more important when purchasing cyber or when bringing cyber into an existing insurance program, that you're aware of that fact and that you work with people who are familiar with the forms, because they're very varied. There is no standard form, and we'll talk a little bit more about that. So the gist of it is different courts interpret policies differently. Generally speaking, all insurance contracts are contracts. They operate under the general rules of interpretation. Words have meaning. They are given their prevailing meaning unless there's something that makes it ambiguous. And without getting into that too much, that plays into whether or not the coverages you purchased are actually afforded to you after a loss. And we'll talk about that. Risk management as being multifaceted. This is a very important slide because it sets the tone for the rest of our conversation. Many times when dealing with clients on the back end of a loss, where things are coming rapid fire, you're getting sued directly from third parties, you're having to deal with an insurance company, and hopefully not, but oftentimes having to sue them, two litigations at the same time, several different lawyers involved, sometimes appointed by the insurer, sometimes not, sometimes hiring your own counsel to monitor the counsel appointed by the insurer. Things get very hectic, and things get very expensive, and it happens very quickly. That is just the case with insurance generally. In cyber, everything moves fast forward. The point is, we're here today to discuss ways in which you not only can comply with your duties, but manage your risk and reduce your costs when responding to a loss by looking at it on the front end. And so that is why risk management is an important principle of business. It's something that goes from the C-level suite to IT, to HR, to in-house legal, outside counsel. It's an organism, a living organism, that all those moving parts have to work together. And so hopefully when we're finished with our presentation, you'll have a little better taste for what those different duties are and how they mesh to make sure that you have a comprehensive risk transfer for your business. So, Clark?
Yeah, so as Jackie said, we'll do a quick overview of the key concepts of insurance, kind of fly over the general liability scope to kind of get into the nuts and bolts later on of a cyber policy. And like any general liability policy, it's going to be broken up into a few sections that can be interpreted differently. It's your job, to make sure, or your team's job to make sure to interpret it in a way that it doesn't become ambiguous to you. By doing so, within that you have the coverage grants, which in insurance terms would be the insuring agreement, promises made by the insurer to the insured for losses incurred by defined covered peril. It may identify the perils, the risks assumed, the nature of the coverage. You have the undefined terms, the exclusions that might limit coverage specifically or broadly, those endorsements that give it back, and then the exceptions to those endorsements. There are some other provisions that you may want to consider before placement that can include choice of counsel.
Sure. And before we get into that, something when you were speaking that came to my attention. One of the things that you are required as a business owner in Louisiana, you are assumed to have read your policy and to have understood it in the same manner in which the underwriter who prepared it and your agent who placed it understands it. I thought that was pretty funny. Because, the only thing that people hate reading more than privacy policies is insurance policies. What does that do? How does that impact your position in a litigation? Well, the insurer will, straight-faced, come in and take the position, well, that's what this policy means. It's what it was always meant to be. We had a meeting of the minds. It was never meant to cover this, and they knew it. And the courts are obligated to assume that you have that knowledge. So this is why it's so important that whomever, whether it's you, your legal, your HR, whoever is reviewing these for you, you cannot rely on someone else. Your agents, your brokers, they understand the policy forms. They do not understand your business. There is something called a manuscripted policy. They can be an entire policy, which is rare. They can do endorsements, et cetera. And those are very important, and it's impressive to me how many businesses are unaware of that option. I know Clark does business with manuscripted policies all the time, particularly with cyber risk, because nobody knows what you're insuring. So you should take the time to read it, take the time to understand it, and you know what's wonderful, and I highly encourage, you can correct me, Clark, if you think I'm wrong, go through some hypotheticals with your agent. Have the underwriter respond. Because there's nothing more helpful for an insurance coverage lawyer than an email string where you said this was going to happen and they said it was covered. With respect to the things that Clark mentioned, the undefined terms and the exceptions to buyback coverage I think are particularly important. In essence, you'll go to the first, second, third page of your policy and you'll see a list of defined terms. What is a claim? What is a notice? What is an insured? What is an insurer, et cetera. Pay particular attention to those, read them, understand them, and then go directly to your coverage grant, which is usually Section A, which it tells you we will pay, and consider how many of the remaining words are not defined. That's where they live. They live in that ambiguity. And because of the rules of construing contracts that require you to give meaning to the contract as written, unless there is an ambiguity, which is inherently difficult to prove, you can't bring in any outside evidence to prove that your interpretation is correct versus theirs, unless you can first identify an ambiguity. So those terms, your understanding of them, how you use those in the placement of insurance coverage are going to be very important, and particularly when we get to cyber insurance.
Typically, just in a general liability policy, it's your basic coverage, your basic slip and fall. In any general liability policy, it's going to be broken up into two forms of coverage. Your coverage A, which is your bodily injury and property damage, those unintentional torts, and then coverage B, the specific torts like your personal advertising, more so of intentional towards. Individual policy language can vary, but they come in basically two flavors. The named peril, which is much more basic than the all peril broad form, which provides coverage for the risks that aren't specifically excluded. The basic form is just going to specifically list the perils. The differences that you'll see will come in a variety of three areas. The scope of the coverage, like I said, is the basic form is the named peril, whereas the broad form is going to be the all peril policy. The post-policy interpretation is where it's going to stick out and have a big impact, because that basic coverage, the burden is on the insured to prove one of the named perils caused the loss, whereas on the all peril, the burden would fall on the insured to prove the peril was not specifically excluded. Premium calculation is also a factor. Obviously, the broad form is going to be a little bit more expensive than that basic form, but it's going to provide that ease of mind come the claim time.
So one of the reasons I asked Clark to talk about the CGL is mainly because I wanted you guys to see exactly what it's meant to cover, because a lot of the things that I hear from my clients are, I don't need cyber coverage, I have a CGL, and I just bought a policy endorsement. If your CGL is written to cover specific perils or all losses developed by that case law that we talked about, in which cyber did not play, it's not written for cyber. And if you endorse a CGL policy for cyber coverage, two things will happen. Number one, you're going to have a sublimit. And that sublimit is not what you placed originally. You valuated your loss internally, your agents valuated your loss, you needed $1 million, you needed $5 million, whatever it was. You get an endorsed coverage, you don't get access to that $1 million, $2 million, $5 million. You get access to $500,000, $250,000.
But it would eat into your total limit of $1 million.
Correct. So you don't get the benefit of your large limit, but they'll certainly take whatever you use out of your remaining coverage limits. The other thing is that your undefined terms become even more egregious, right? You're trying now to endorse a policy that was never written to cover this type of loss. None of the terms were written to cover this type of loss. And you're just going to add an endorsement on and basically roll the dice and see if you hit payday. That's very dangerous. In light of all the costs on the front end, the first party costs that you're going to bear for notices, for forensics, for PR, which is incredibly important, you're basically gambling your ability to cover those costs. And in essence, you were gambling the viability of your business in many instances, because small businesses and mid-sized businesses are the main target. So that's why we included the CGL. Excess insurance, it's there if you want to look at it. It's basically something, it's a policy that sits above your CGL. It covers exactly the same things, but it kicks in after you pass your original threshold, your original policy limit. Umbrella insurance is a little different. It acts just like that. An umbrella, it covers more. Oftentimes, it can cover the same things. It can also cover additional things. In the case that it covers additional things that are excluded under your original policy, it would kick in after a self-insured retention, which traditionally matches whatever the cover was under your original policy. Let's get to the good stuff. All things cyber. I think important here is that liabilities and costs for cyber, they do respond to your company size, and that's generally because your data is going to be reflective of the business that you do, the people that you represent, the data that you handle, and traditionally it will mirror the size of your business, although that is not always the case. The important thing here is the small business figure. That's as of 2016. It went up from 8,000 to 36,000. And that was before the tipping point where we had the disclosure of the NSA tools, where we had WannaCry, where we had Petya, and the list goes on and on and on. So you can imagine at that accelerated growth rate what it's going to do now. Assessing your vulnerabilities for cyber is not about looking at annual revenue. It's not about looking at payroll. These are information that you're used to providing to your insurance companies, right? It's driven by what you manage internally, how you manage it, how long you store it, your protocols for storing it, whether you actually enforce those protocols, what type of data you manage, and what type of policies, security policies, privacy policies, data, customers, your third-party vendors have. Third-party vendors is going to become a very important theme as we discuss and we go through cyber coverage. My mother always said, you know, when you marry your partner, you also marry their family, right? And we all know that, those of us who are married. Well, it's the same for cyber and third-party vendors. You marry your vendors, and what their exposures are often translate to your exposures. You need to prepare for the what if in placing and evaluating your insurance coverage.
Two things, the cyber attacks and the data breaches. Those cyber attacks are defined as deliberate acts through cyberspace to manipulate, damage, or destroy those computer systems or networks, industry control systems, personal computer devices, or any other interconnected device. The attacks have potential to create sweeping economic damage at a relatively low cost, and the recent examples includes efforts to deny access to computer networks or systems and the encryption of valuable data held for ransom. I'm sure you've read in the news where systems get hacked and they're held for ransom and you have to pay $25,000 in bitcoins to reopen them. They're in the news, I think they're on TV shows now too. The difference between those and the data breach is that security incident in which sensitive, protective, or confidential information is copied, transmitted, viewed, stolen, or used by an unauthorized individual. That can be anything from a cell phone being stolen, a laptop being stolen, to your system being hacked and the PII information, that personally identifiable information is compromised. A good rule of thumb is you're struck by lightning 1 in 960,000. The odds are your odds of experiencing a data breach are 1 in 4. Now, as these statistics continue to rise, it's not a matter of if, but when, from small to medium businesses. We hear about the large ones. You're not going to hear about the small and medium ones.
I'm curious, who in this room has been touched by a cyber attack or a data breach? There's no shame. Or maybe there is a little shame. How many of you guys have credit cards? Aha. Guess what? All of you have been touched by a data breach, and a rather large one. Equifax was not 1 breach, but 4 breaches. They just didn't tell us about the other 3 until much later. The point is, all of us are interconnected in the transactions that we do, not only in business, but personally. I had a friend the other day who was contacted by a lawyer because he had hosted a party at his house, and he had given out the Wi-Fi password. And apparently, somebody was on the network, and they had an intrusion into their cell phone, which they actually were using their business cell phone. Okay? So let's put a pin in the fact that my friend is very, very scared because there is no cyber endorsement that I'm aware of for homeowners insurance. That may come another day. But let's talk about this random man using his business cell phone in an unencrypted, unsecure network and then bringing it back to the office. Let's talk about the fact that we're here at a data breach seminar, all specialists, all learning the cutting edge information, of course, and I handed Daryl this morning a thumb drive from my computer. He put it in his computer, and he put my PowerPoint on it. It is that simple. We do it every day. And the reason I say these things and I take the time to actually mention this is because we don't think about it that way. And we need to. Because once you start looking at it that way, you start to understand the intricacies that you need to cover your risk. Okay, cyber liability policies, standalone policies, not coverage endorsements. They cover first-party liability, they cover third-party liabilities. First-party liabilities generally track forensic investigation, notice and reporting, credit monitoring, et cetera. All those compliance issues, both state and with your own customers and your own security policy, which I know everyone here has. those are going to be covered under your first-party coverage. So third-party coverage is your traditional, what we think of when we think of insurance, right? Somebody sues me, I get a judgment, this guy's going to kick in and going to pay it for me, right? All of those things would fall under third-party liability coverage. Other things that are nuances for cyber are the responding to regulatory inquiries. That's not something that you traditionally see in your CGLs, although it can be manuscripted. Cost of regulatory fines and penalties. When you're dealing with PII, you inevitably you become obligated to the payment card industry standards. BMO, Harris, MasterCard, Visa, et cetera, they yield a wide stick. And while you and I, as consumers, are always happy to know that I can call my credit card and say, I didn't do that, and they'll take it off, no problem, all is good. Well, whoever the vendor was that opened the door to that possibility, right? Assuming something is not a theft, they didn't just take your card, right? They're on the hook for fines and penalties, PCI fines and penalties. They're also on the hook to reimburse the payment cards through their bank, their master bank, BMO Harris. It's something that impacts greatly people in the restaurant industry, tourism industry, people who deal with it on a much larger basis, but it can impact anyone who does a side business with an Apple Square. Again, it's not necessarily, your risk is not necessarily driven by your size. But going back to first-party costs, I call it Cyber Cinderella because nobody ever really thinks about that. It's becoming more and more the norm, and obviously the people sitting in this room are conscious of it, or else you wouldn't be here. But traditionally, if you endorse coverage to a CGL for cyber liabilities, you will get very limited, if any of this coverage for first-party costs. Is that right?
Correct.
And think about what you're talking about here, right? The forensic investigation. This is somebody with a highly technical background who's going to go in and basically dissect every person's email, thumb drives, your PCs, your network, all the things that are way above my pay grade. That's expensive. It's time-consuming. And depending on the breadth and size of your network, whether you manage most of your things online, that can take a lot of manpower. Right? And all the while that's happening, you're dealing with lawyers, right? And you don't have appointed lawyers through your cyber policy because you just endorsed coverage, right? So they don't have an obligation. They have an obligation to defend you if somebody sues you because of the breach. They do not have an obligation to provide you with counsel under endorsed coverage for you to respond to the regulators, to determine whatever your forensic team found for the breach, whether that is a material breach, whether your notice obligations are triggered, et cetera. So these are very expensive, they happen very quickly, and they gather steam. And if you endorse coverage, you will not have coverage for these costs.
It may even be tied to an actually general liability covered peril, which a cyber peril is going to be something completely different.
Right, so you may actually have to have one of your named perils happen to trigger the cyber issue before you can even access the little coverage that you have. Another important aspect of this that most people who have a business, you'll have CGL coverage, you'll also have business income or business extra expense. Those of us who went through Katrina realized just how important that really was. In essence, it's coverage that will pay your employees for the cost of rebuilding whatever it is that you lost. Data is no different, right? If you lose data or you're denied service of the data that you created, that has a financial impact. How long it will take to get you back up to speed, whether or not your employees are no longer engaged in new business because they're now trying to recreate it, those are things that, those expenses would not be covered under endorsed coverage. You need to seek standalone cyber coverage, and you need to request specifically coverage for business income and extra expense. Third-party liability. So we know that this is, you have a breach, you have a loss, you're hacked, whatever the million reasons and ways in which you can lose data or compromise other people's data. So you get sued, right? And this third-party coverage, which would also be the coverage that you get under a cyber endorsement, will kick in. They have an obligation to defend you. They have an obligation to contribute and indemnify you against any settlements that are reached that they consent to, against any judgments that are entered against you. Now, insurance, in my experience, and I've represented insurance companies first, and now I saw the light and I represent business policyholders. But I can tell you this, in my tenure, insurance companies have become much more likely to deny and litigate than they were, say, 10 years ago. Whether or not that's a creature of Louisiana and what happened with Katrina, I can't tell you. What I can tell you is the larger the policy and the larger the loss, the more likely you will not only have to fight them on the coverage and your defense, you will also have to retain counsel to defend yourself. So I say that because it's important in my mind, and I'm sure in yours, and you can probably talk more about this than I can. Knowing your insurer is just as important as knowing your policy, right? It's important to discuss their loss history, to consider the positions that they've taken in court on similar policies, and that's something that Clark and I frequently, we'll work together on something like that. That's something that you want to engage counsel or have your in-house counsel look into, because it's fair to say that that's the position that they'll take in any future litigation.
The same questions that insurance carriers are asking you whenever you're having a policy quoted, your claims history, your internal security protocols, what history do you have in this line of coverage? You can use that, to discuss with your broker, with your internal risk management, with these insurers as well that may be quoting on the business for the cyber coverage. What experience do they have? How many policy premiums are written? What's their loss ratio look like? How do they respond to losses in this case versus this case versus this case? Ask the examples. Have them, bring you the information, the same type of information that they're requiring of you, require that of them.
Well, and I think it's safe to say, Clark, you wouldn't rely just on, I asked for this coverage, my guy brought it back, these were the competitive, prices, I'm going to go with a low price because it's good. Is it a AAA? Yeah, it's AAA, we're good. You don't want to do that,
no.
Right? Your agent should ask more in-depth questions of you, and you should ask more in-depth questions of your agent, because if you're able to do that, if you're able to ask those questions, then you understand your business better, which you can always translate into a business pro by making it more efficient, et cetera. But more importantly, for our purposes, you understand your risk, and you understand what you need cover for. So, third-party liability, I'm going to breeze through this standalone versus cyber endorsements because I think we've pretty much covered it. Transferring liability through the cloud, I think we've also discussed that. One thing that I want to mention here, because Clark brought it up, is the limitation of liability issue. We briefly touched upon it when we were talking about vendors. Generally speaking, you're going to have a service contract with your vendors. In that service contract, they're going to have a limitation of liability that traditionally will be enforced, particularly in the Fifth Circuit, in Texas, Louisiana, et cetera. And so, like I said, it's not going to trace your exposure. It's simply going to limit their liability to pay you for anything to, traditionally, it's 1-year contract value. It can be more than that. If it is, they should come talk to me. But if it isn't, that's what you're dealing with, right? Okay, in-house, outside counsel. I say this for the attorneys in the room, although I'm not quite certain we have that many. It's still good. It's still good information for those of you who are business owners in managerial roles or play any kind of role in IT, HR, legal, in-house. Due diligence, you need to look at your data, you need to look at what you're storing, how you're storing it, when you're storing it, who you're storing it for, look at your software, look at your vendors, all these things that we talked about. Industry and market, it does play a role. If you have government clients, you are a target. You are absolutely a target. Because think about it, you're their vendor, right? You are the weak link in their chain. So if somebody wants to get to the government and you represent them, it's a hell of a lot easier to go through you than it is to go through them. Okay, prevention, HR components, and risk transfer. One of the things that people don't realize when they think cyber is employees, right? I mentioned the cell phone, that happens. I mentioned the thumb drive. Employee theft of data and PII is a real thing. And it's very difficult to secure coverage, although some people have had success in straight-up criminal policies or CGLs with some artful arguments. Even with those successes, it's getting harder and harder to do that because Insurance Services Office, ISO, has introduced a form to basically exclude all data liability. And they've decided in the courts that they're going to uphold that because thinking of whether you're thinking, satirically as the insurer and supporting insurer business, or you're thinking of the consumer and protecting the ultimate consumer, requiring and encouraging separate cyber policies is a policy that the state and the courts want to uphold. So there's moving parts in all of your internal processes, and it's important to sit down and talk about those. In response, I think Ray covered pretty much everything. From an insurance perspective, we've talked about the fact that those first-party losses would only be covered in a standalone. Your preservation, notification, PR, all of those things you get in standalone, you do not get in endorsed coverage. It's important in that response to consider what will happen in eventual litigation. While you're certainly going to take those steps to avoid it, preserving everything, preserving your computers, the data, the forensic analysis, et cetera, that's all important because if and when you get into court, you don't want to have what's called an adverse inference and essentially have that evidence held against you as if it had been proven against you.
And like the response, you can almost use it, some of these companies that you see in the news, as a strength with the PR. Try and get out, there's a hack, okay, it's terrible. Try and get out in front of it. Use it as a strength. You're the benchmark. Okay, look what we were able to do. We were able to secure all of our clients' information. We were able to get out in front of this thing to make sure that they understood what was going on. We were monitoring their credit. We were notifying them of the breach. We were upfront with all the information from the beginning. You have the ones, and I don't know if Equifax really did it right, but the ones like Target who were able to figure out what exactly went wrong, when it went wrong, and how it went wrong, and what they're doing to mitigate it in the future. You can use that as a strength, as bittersweet as it may be, to retain that customer loyalty.
Well, and the interesting thing that comes to mind when you mention that is a lot of insurers who I've spoken with, and I know you've spoken with, are using this time period with, to test their policies, to test their forms. And so they'll enforce an arbitration agreement to deal with whatever the issue is with you behind closed doors and not have that information made public on whether or not they're going to take a position that covers it or not, right? Because it's bad for business if they're not. And then they'll write off the costs of paying your claim as R&D. Isn't it wonderful? So if you're lucky enough to have a sizable loss that's just not too sizable, in my mind, I'm thinking $1 million, then you'll probably get paid. But you never know. Yes, sir.
Earlier, before the slide, you were mentioning, it's like the onus that you were saying earlier is on us to really examine the policy, but there seems to be no liability at all if a broker or insurance company doesn't fully explain a policy or the implications of a policy to somebody who signs up for it, and then they have a claim that gets denied. It seems like that's set up not to be benefiting the market at all.
You're right. You're right. I wish I had a better answer for you, but that is, you've hit the nail on the head. Now, are there liabilities for the agent broker? Yes. I'm going to let him talk about that.
Sure.
Are there liabilities to the insurer for illusory coverage, which basically I sold you this, I said it was going to be wonderful, and then it was wonderful and it wasn't? Yes, absolutely. Don't take difficulty for impossibility. What I'm trying to express is the cost, the time that it would take on the back end to litigate those issues and ultimately come to a judgment. Number one, it's 50-50 because you're putting your livelihood, your money in someone else's hands, right? And I can tell you from experience, nobody likes to talk about insurance coverage, especially not juries. So you can recover, you can enforce policy, absolutely, that is what I do. I like to think I do it successfully, but it's costly. And so my preference for my clients is always to perform this evaluation on the front end.
And it's more, insurance coverage for it. Insurance is merely just a supplement. It's not the solution. Internally there needs to be the proper measures that are taken. And I would go in with a client, sit down with them and say, okay, tell me about the exposures. Have you done, an IT compromise test? Have you done a vulnerability test to see where some of the gaps are, where are some of the holes? Where is it that you're most exposed? You look at those, you're able to find that information in an application. They're lengthy, but that kind of information is what's needed when quoting, when going out to the market, when talking with carriers to be able to quote on an insured and rate it up. It's time consuming, but it's worth it in the end, and there's more to it than just the policy, obviously. Everybody has to be on board, as it would be, it's much different than that traditional general liability slip and fall coverage.
I want to move on just so that we make sure that we cover everything, because I've included in these slides, and again, we'll make sure you get all of those via email, some of the questions that you'll face in a cyber application. And let's see. Okay, sorry. So these are some of the questions. Not a single, I took this from several applications with several different carriers, some domestic, some through Lloyd's of London, to give you a flavor for what they're looking for, right? And one of the things that I think is most important in insurance evaluations and placements is your insurance application becomes a part of your policy. Am I right? Mm-hmm. And what does that mean? You need to take time and have the right people fill this out. Because if you just go through it like checks and boxes and somebody misses something, or you delegate it to somebody who's responding to things that they understand and also things that are not in their wheelhouse, that's a problem. And what does that do? An insurer comes back to that application, looks at the claim and says, you misrepresented. I would have never issued this risk. I would have never written the policy, so it's void. That's a big deal. Go ahead.
And one good thing about it, if there is a good thing about it, with cyber being so new, it's like the Wild West of insurance right now. There's no ISO form that they follow. This is manuscript. So whatever you want, you dig into it and you say, this is my biggest concern, this is my biggest scare. I'm afraid that if, I shut down, if somebody hacks into my system or holds it ransom, I'm not going to be able to get out this information for a week. Okay, that's a business income issue. Like, let's focus on that. That's where your big vulnerabilities are. Full prior acts coverage. There might be an exposure that you didn't know about that your system was hacked a year and a half ago that might not come.
I want to mention that. I want to spend some time on that if we can.
Okay.
Cyber policies are claims-made policies. Sometimes they're claims-made and reported policies. Your traditional CGL, your homeowner's policies, they're what you call occurrence policies, which basically means I buy coverage for today through tomorrow. Something occurs, it's covered, assuming that all those other things are made equal. Cyber policies, I'll purchase today through tomorrow with a retroactive date, right? And so I know I've had this discussion with some of you here, some of our clients, that you always want your retroactive date, if you can, to be business inception, right? And that way, anything that you didn't know about, anything that isn't in active litigation, which of course they'll exclude, will be covered. It's not always possible, especially for businesses who are well established, but you certainly want to make that date as far back as possible. That then makes two other provisions in your application very important. Number one, known acts, right? They're going to ask you, are you or do you have any reason to believe that you could be sued, that you've had a breach, that you've been hacked, and what was your reasonable due diligence? What did you do to make sure that you can make that representation? And remember, whatever you answer is part of your application, and the reason for the rating of the risk, and the reason they issued the policy, and voila. If you don't get it right, you may have a void policy argument. The other thing that makes the retroactive date so important, and the reason you want to move it back as much as possible, is, it's kind of like oil and gas cases. It's a long tail litigation, right? I can hack you today, and you have no idea, and I'm just sitting there, right? I've got whatever malware, virus, sitting there, waiting. Whether I'm waiting because I can't figure out what to do with it, whether I'm waiting because I know you're going to do a specific transaction, doesn't matter. If that's sitting there before your retroactive date and then activated, you're going to have an argument. Now, I've certainly taken the position that it should be covered, particularly where you have no reason to believe that it would be covered, because you're not triggering the known acts exclusion if you don't know about it. But there have been some arguments on the other side to the contrary. And because we haven't litigated these issues in the public sphere, we don't really know where they will end up. So the bottom line is, on that particular issue, the retroactive coverage, it's very important to get that date as far back as humanly possible. And if you can, I highly recommend going through a forensic evaluation before placement, just for yourself, to make sure that you are responding correctly and you're not jeopardizing the coverage that you're paying for.
And by doing those types of things, those internal security measures that you might already have in place, that information can be profitable for you whenever they're rating it. You can get coverage credits for that kind of things. If you're taking on the risk management, they're going to reward that. They'll credit that. It's not just don't fly through those applications to hurry up and get them done, because that information can be vital and important to you for your policy. Carriers want to know that. The more information, the better. There's nothing to be left out.
Along those lines of there's nothing to be left out, premiums are very important. They're part of your business. Nobody ever wants to pay for insurance, although they're always happy when they have a loss. And cyber policies can be expensive. And the reason for that is what we've talked about ad nauseum, is that nobody really knows what they're insuring against. Nobody really knows what the full spectrum of risks are. But there are things that you can do to both minimize your risk and lower your premiums. And your applications will ask for these things. What are your training practices? What are your procedures? How do you deal with people who no longer should have access to email, computer, network, etc.? Physical security, written policies, which of course you will follow so that you don't have to worry about a void argument. These are all very important. And again, working with in-house legal or outside legal, working with your agent broker, working with your IT professionals and your managers. This is a process, and I think the main takeaway for our discussion is cyber insurance is a must. I 100% agree with Ray. You should have had it yesterday. Don't worry if you didn't. You're here now. We're going to fix it. You just need to make sure that you take a real look at what your business is and what your risks are to make sure that you're purchasing the correct policy, the correct limits. And I highly encourage, and I know that Clark agrees, that you consider standalone coverage. Any questions?
And cyber can also, it's now where it can overlap into the other areas coverage that you probably already have. Crime, directors and officers, errors and omissions. Those are specialty management liability policies that cyber can trickle over and can, run with both. I mean, they're almost sister coverages in the way they can share the same type of exposures. If there's a breach and, you were held liable for it because of some decision that you made, it could be a directors and officers issue or an errors and omissions issue.
Well, and one final thought on what Clark mentioned. If you have an existing scheme, which I'm sure you guys do, and some kind of risk management program, whether it's a CGL, excess umbrella, or just a CGL, introducing cyber coverage, it's just as important to do that introspective evaluation as it is to consider the policy forms that you're purchasing and their impact and interplay with what you already have. Do you have anything else?
I think we covered it. Nobody fell asleep?
That's good. Success. Thank you, guys.